welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Sensex and Nifty gained for the fifth straight day thanks to a late rally on the monthly expiry date. This is the longest winning streak in 2 months. Shares of Kotak Mahindra Bank tumble after RBI bars the onboarding of new customers via digital platforms. Sources in the RBI defend the restrictions, saying adequate time was provided to remedy the issues. Also add that the action is intended to have a demonstrative effect on the ecosystem. Vodafone Idea FPO shares open at a 7% premium on the stock exchanges. Chairman Kumar Mangalam Birla says fresh investments will trigger a cycle of growth as after the company raises 18,000 crore rupees. Also dismisses any talk of sale of shares by the government. Shares of Facebook's parent company Meta plunge as much as 19%, wiping out $200 billion in the market value. Mark Zuckerberg's plan to increase spending by $10 billion to bolster artificial intelligence does not go down well with investors, even as Meta reported a 27% jump in revenue. Swiggy receives board approval to launch a $1.2 billion IPO, also plans to raise 750 crore rupees from anchor investors ahead of the IPO. Swiggy is yet to reveal the timing of the IPO. 89 Lok Sabha constituencies across 13 states and union territories go to polls tomorrow. This includes the remaining assembly segments in outer Manipur as well. Voting will take place across all 20 seats in Kerala. Bengaluru will vote as well. The Election Commission issues a notice to BJP President JP Nadda over complaints by 3 political parties that Prime Minister Modi's speech in Rajasthan's Banswara violated the Model Code of Conduct. Also sends a notice to Congress President Mallikarjun Kharge over BJP complaining that Rahul Gandhi's speech in Kottayam last week violated the poll code of conduct. The White House seeks answers from Israel after a mass grave was found in Gaza hospital that was under siege from Israeli forces. More than 34,300 Palestinians have been killed in the war so far. U.S. Secretary of State Antony Blinken tells China to manage ties responsibly as he arrives in Beijing for his second visit this year. The bilateral talks begin with the threat of U.S. sanctions on China looming large over its support of Russia in the Ukraine war. Right, markets gained for the fifth straight session, the longest streak in 2 months. Nifty and Sensex recovered from opening low to end at the day's high, gaining over 0.5%, while banks rose in line with the blue chips. Mid-caps mildly underperformed. PSU Bank saw major buying with the index soaring over 3.5%. Prashant Nair is here with the details. Prashant.
A very strong day, especially if you consider that the market in the morning was looking a little leafy. We were actually down, and from being down about 70, 80 points early on, there was a sharp recovery which set in. We're looking basically at now all-time highs as the next logical target, not just for the Nifty, but for the Bank Nifty as well, as the intradays essentially are telling you the close today. Now, mid-cap index underperformed marginally. I mean, it was up about 0.5%. The small-cap index was in line with what the Nifty did, 0.75% or so, as far as gains are concerned. For the broader market, no problems. It's been a great week. Now, let me come to large caps here. Now, Axis Bank, of course, was the big one from the private sector banking space, which participated in the upside. Numbers were great. SBI, though, with a 5% pop, did an equal amount of heavy lifting. It started running up a little later in the day, but did quite a bit. Dr. Reddy's, JSW Steel, Adani Enterprises and Hero were some of the other names which did quite well. On the downside, of course, clearly, Kotak Bank with that 10-11% cut. Big drag, LTIM and HUL were some of the other stocks which went south. In the broader markets, advances outnumbering declines. MCX, which had sold off 8%, today came back about 7-8%. So complete reversal there. Mazgaon, shipbuilders as a theme, we highlighted this yesterday. It's been a great week, second day running, strong gains. Bharat Forge, there was a brokerage upgrade. Jupiter Wagons saw a large win, but it was not just Jupiter Wagons. A couple of other railway infra stocks also did well. AB Capital, Power India, Inox Wind, MOIL, there was Indian Overseas Bank, Shipping Corporation of India, Viatech Vabag, HBL Power, Balaji Amines, to just give you a flavor of what really went up with volumes. On the downside, you had Oracle Financial Services, Indian Hotels, Dalmia Bharat, of course, results reaction, some of these. Lodha again, which went down after earnings. Spark, Aster DM and Cyient, which were down and out. But, the list of volume-led gainers much longer than what went down with any significant amount of volumes. US markets have been pretty quiet as well, although they've been moving up slowly and steadily. It's an earnings-heavy week, both here and in the US, and I guess tomorrow morning that dominates once again. Back to you.
Thank you, Prashant, for that update. Private lender Kotak Mahindra Bank has issued a clarification citing that restrictions imposed by RBI will not impact its existing customers. Explaining further, the bank has also said that it has taken measures to adopt new technologies to boost its IT systems. Now, this statement comes after the Reserve Bank barred the bank from onboarding new customers on their mobile and online platforms and restricted them from issuing new credit card shares of Kotak Mahindra Bank. Now, the shares tanked over 11% in early trade on the back of this development. And sources close to the RBI have defended the central bank's move to bar Kotak Mahindra Bank from onboarding customers via online and mobile banking and from issuing fresh credit cards for inadequacies in its IT infrastructure. Sources close to the RBI have said that the regulator wants financial entities to put greater importance on risk management and regulatory compliance. Ritu Singh joins us for more on this. Ritu, the action on Kotak Mahindra Bank is also a message for others, is it?
You know, there's been a series of actions against financial entities by the RBI, leaving many to question the broader message the regulator wants to send and if the mode of supervisory action, in these cases a business restriction, is the best way to deal with non-compliance. Now, we spoke to sources close to Reserve Bank of India and the message was clear. If you look at the various actions taken against banks and NBFCs of late, the focus is on a few select areas: risk management and assurance, compliance of regulatory guidelines, board effectiveness, fairness to customers and governance, and the RBI is very keen to enforce these as priority focus areas for all regulated entities. That's the first message. Secondly, we understand that in these cases there is a minimum period of a year at least of bilateral discussions on the deficiencies, with more than adequate time given to respond and remedy the issue before any action is taken, and so it's not a moment of surprise for anyone involved. Third, the business restrictions, which may end up impacting customers as well, are taken only as a last resort of sorts to protect customer interest when bilateral engagements and warnings are not heeded to. Fourth, on the question of why action is only against select entities when other banks or NBFCs may also be at fault or non-compliant, we understand the action is targeted on entities where, one, non-compliance is persistent, and two, where the impact on the system is proportionately high. And so the RBI action is intended to have a demonstrative effect on the ecosystem. Lastly, if you've noticed, RBI has been given a more detailed explanation for the actions taken in public releases, very unlike earlier incidents where barely a line or two were dedicated to the reason for regulatory actions. And this, we understand, is based on feedback from stakeholders and to send a message to others to take notice and fix their houses if not in order, else face the consequences.
Thank you, Ritu, for that. Tech Mahindra's fourth quarter earnings is in line with street estimates. Net profit rose nearly 30% sequentially, while dollar revenue dipped 1.8%. Rima Tendulkar joins us with the details. Rima, take us through the numbers, please.
Thanks so much for that. So it's largely in line. Revenues, in fact, have come in slightly better than what the street was anticipating. The company's constant currency revenues have fallen. They've fallen by 0.8% on a quarter-on-quarter basis, but the street expectations were for a 1.5% decline. So on the top line, there is a little bit of a beat. Now, margins for the company have expanded by 200 basis points. EBIT margin at 7.4%. versus 5.4%. This is bang in line with street expectations. You know, the reason why Tech Mahindra's margins are lower than peers is because in the last couple of quarters, the company has been exiting certain unprofitable accounts. So in the last quarter, that's Q3, while the reported EBIT margin was 5.4%, the normalized margin was 7% if you adjust for that. This quarter, the expectation was that there will be no such exit of unprofitable account. So 7.4% was what the street was anticipating, and the company's delivered on that. Profits are up 30% on a quarter-on-quarter basis. Deal wins for the company have largely have come in at $500 million, which is in line with what the street was anticipating. In the current quarter, we've seen a bit of a drop in the communication vertical, while it's the BFSI vertical which has done well for the company. But all in all, a beat on the top line, margins in line, deal wins in line. Back to you.
Right, thank you, Rima. Tech Mahindra management is addressing the media at the moment. Let's cut across.
The margin rate we got for the quarter was 7.4%, which is an expansion of 200 basis point on a quarter-over-quarter basis. We'd also mentioned last time that as part of our year-end process, we'll continue to look at all the portfolio companies for any impairment impact. So in the quarter, we've seen an impairment impact through that assessment of 37 million. At the same time, there's a consequent increase in other income or miscellaneous income, which is a reversal of earn-out that we typically keep as deferred payments for these portfolio companies, and hence that reversal in line with the impairment charges has a negligible impact on the P&L. The effective tax rate for the quarter is 30.7%, which was driven by some one-time impact we got. But when we look at the year, our tax rate is more aligned to what we had said at 25.7%. Our net profit after the tax rate is 79 million for the quarter, which in rupee terms is 661 crore, which is at a PAT margin rate of 5.1%. This is an increase of 120 basis point on a quarter-on-quarter basis. Free cash flow, as Mohit mentioned, we had 129 million of free cash flow for the quarter, and our DSO went down to 92 days, resulting out of the good cash collection that we had in the quarter. Just talking about the hedge book, as you know, we follow a hedge policy, and we have a hedge book of 2.4 billion quarter ending March against a 2.3 billion quarter ending December. Basis the mark-to-market accounting policy, we had 23 million gain because of the revaluation of these hedges, out of which 7 million is taken to the P&L, and the residual 16 million is taken to balance sheet as future reserves. Our cash and cash equivalent was very healthy at 949 million ending March, which was an increase on a year-on-year basis, where we were close to 900 million the last year. Moving to a full year performance, we ended the year at $6,277 million, which is a constant currency decline of 4.7%. In rupee terms, it's 520 billion rupees, with a decline of 2.4%. When you look at it from a sectoral perspective or vertical perspective, our communication business declined year on year by 12.4%, driven by the macro trends and some one-time revenue we saw last year. But on the other side, on key verticals, manufacturing and technology both grew year on year, respectively at 7.3% and 1%. In terms of large deal TCV wins for the year, we aggregated at 1.9 billion, which was an increase as we moved towards the fourth quarter. And some of it is driven by some conscious decision we've taken to selectively look at deals as we move forward, which aligns with our portfolio strategy. We ended the year with an EBITDA of 599 million and a EBITDA margin of 9.6%. The EBIT for the full year was 380 million, and the EBIT margin stood at 6.1%. The decline year-on-year basis is predominantly driven by the revenue pressure that we saw, some of the one-time client actions where they reduced their business as a part of alignment at their end. And then from our perspective, we took some actions on de-risking the portfolio, which resulted in a reduction in revenue.
All right, so that was Tech Mahindra. Moving on, IndusInd Bank has also reported a mixed set of fourth quarter numbers. Abhishek Kothari is here with the analysis.
Well, it is a mixed set of numbers coming in from IndusInd Bank. Take a look at the absolute value of gross NPA and net NPA. They are up 5% on a sequential basis. However, as a ratio, gross NPA ratio at 1.92% and net NPA ratio at 0.57% are flat on a sequential basis. So we need to watch out for the movement of NPA, and slippages might have been on the higher side is what I understand from this number. NII growth is weak. However, the other income that's grown at 16.5% YOY at about 4.7% sequentially. This has helped the PAT this time around. OPEX or operating expenses have declined by, have increased by 3.1% quarter on quarter, but in that the other operating expenses have declined 10% quarter on quarter, and that's helped, boost the operating profits. So operating profits for 14 quarters in a row have grown both YOY and quarter on quarter. So this time around, the operating profit have grown by 8.6% YOY and about 2% sequentially. Provisions are up 1.7% quarter on quarter, which suggests that there might have been some hiccups in the asset quality. P&L versus RPOL, the NII is below RPOL, 2% below RPOL. PAT is 1.1% ahead of RPOL. Back to you.
Thank you, Abhishek, for those numbers. More earnings. Nestle reported a strong set of quarter A strong set of numbers there, reporting a beat across all parameters. The company's domestic revenue rose 9% on an annual basis. However, the FMCG giant expects higher raw material costs to hit its margins sequentially. And shares of ACC surged in late trade, with the company posting better than expected fourth quarter earnings. Revenue rose to around 5,400 crores, net profit at 748 crores and EBITDA at 837 crores. All of this better than expectations. Margin rose to 15.5%, meeting the street estimates. In global earnings now, shares of Meta fell nearly 20% and wiped out more than $200 billion in market capitalization as weak revenue guidance soured investor sentiment despite better than expected earnings. Now, the social media giant's revenue surged by 27% year on year to over $36 billion. This the fastest rate of expansion for any quarter since 2021. Its net income more than doubled to over $12 billion. Meta CEO Mark Zuckerberg shared his plans to increase spending by $10 billion to bolster artificial intelligence. He also said that building the leading AI will be a larger undertaking than the other experiences Meta has added to its apps, and this is likely going to take several years. And shares of British lender Barclays rose 4% after the bank reported better than expected first quarter earnings, with net income rising to £1.55 billion. Barclays had reported a net loss of £111 million in the fourth quarter of 2023 due to an operational shake-up designed to reduce costs and improve efficiencies. In the first quarter, revenue was down 4% year on year at £6.95 billion. Pre-tax profits also fell 12% to £2.28 billion. All right, it's time for a short break, but coming up next, Swiggy receives board approval to launch a $1.2 billion IPO, also plans to raise 750 crore rupees from anchor investors ahead of the IPO. Details when we return. Welcome back. Food tech giant Swiggy has got the green signal from its shareholders for a $1.2 billion initial public offering. According to reports, the firm is looking to file its DRHP next month and hopes to list later this year. Aishwarya Anand is here with the details. Aishwarya.
Swiggy is gearing up to hit the Dalal Street as the food tech giant has finally received approval from its shareholders for a $1.2 billion IPO. As per ROC filing, Swiggy is looking to raise up to 3,750 crore rupees through a fresh issue and up to 6,664 crore rupees as an offer for sale component. The firm is also planning to raise around 750 crore rupees from anchor investors ahead of its IPO. As per reports, Swiggy is likely to file its DRHP by May and ultimately list around the festive season. The IPO-bound food delivery platform is seeking valuation in the range of $12 to $15 billion and is reaching out to high net worth individuals to buy its shares at a 20% discount on its current valuation. Now remember, in the beginning of March, Baron Capital revised the value of its stake in Swiggy to $87.2 million, indicating a valuation of $12.16 billion for the hyperlocal commerce unicorn as it gears up for its upcoming IPO. Swiggy's investor, Prosus, which owns around 32% in the firm, will be seen selling shares in the company as it will aim to reduce its shareholding to below 25%. The IPO comes on the back of Swiggy's food delivery business turning profitable last year, and in 2024, the company's key focus will be on growing profitably and improve its EBITDA margins for both its food delivery business and Instamart. Back to you.
Thank you, Aishwarya, for that update. Swiggy's group CEO, Sriharsha Majety, spoke to Shirin Bhan in January this year at the World Economic Forum in Davos. He said the company is preparing for an IPO, but it's not in any hurry.
An IPO is an eventuality. It is an aspiration for us. And in terms of getting ready, I think the last 2 years, we've had so many great companies go out the door. And we've been vicariously learning from their experiences, also understanding what the market thinks of startups. So you could say that. And also early on, even without having a date for anything, we started onboarding like independent directors who are bringing so much value into the boardroom. So I would say, I think given that we've kind of been preparing for it, not in a hurry, but over time for eventual, whenever it happens.
The CEO of DigiYatra Foundation, which operates facial recognition tech in 14 airports, has said that there are no data privacy concerns around the app. Speaking to my colleague Danish Anand, Suresh Kadakbhavi clarified that data is stored in a wallet in the user's phone and neither the company nor its service partners have access to it. Earlier, DigiYatra had dropped Data Evolve as its vendor following reports of a data breach. DigiYatra CEO has revealed that a new app is in the works which will help them cover 14 more airports. The app will include passport-based enrollment.
Neither the DigiYatra Foundation nor any of its support service partners can have access to the data. This data is basically stored in a secure wallet in the phone itself. So from that perspective, there is no central storage of any data. And since there is no central storage of any of the personally identifiable information of the passenger, it is completely secure. It's kept in the wallet of the holder or the passenger. And due to that fact, there is no chance of any data leakage, theft, pilferage happening.
The DigiYatra Foundation actually considered a single man-led company for the entire architecture of the app.
So they were selected through a startup challenge, which was run with Niti Aayog and Atal Innovation Mission. And this was as a sort of a initiative where we wanted to build this ecosystem with the help of an Indian startup.
We have seen that your foundation hasn't given any specific reason, although there have been many statements that have been shared by the foundation. But what is the particular reason why did you guys suddenly drop this vendor?
So this is something which I would not like to comment on. The matter is sub judice.
Data Evolve has been completely removed by DigiYatra. So should we assume that the entire data privacy concerns that were there, they're not there anymore?
It has not ever been there, and it will never ever be there because we ourselves do not have any access to the passenger's data. So suppose a passenger uninstalls the app or deletes the app, all the data goes away because it's only stored in that app, which is in the full control of the passenger. So therefore, passengers can rest assured. It's completely in the control of the passenger himself or herself. So I do not know why this question arises. You can always say no to DigiYatra.
89 Lok Sabha constituencies across 13 states and union territories will go to polls tomorrow under the second phase. This will be the fourth largest round in the 7-phase elections. With this, all seats in Kerala, Rajasthan, Manipur and Tripura will have completed polling. Elections will also kick off in Karnataka with 14 out of 28 seats, including Bengaluru, voting tomorrow. 8 seats in Uttar Pradesh and 7 seats in Madhya Pradesh will vote as well. Tensions in the Middle East continue to rise as Israel continues to bombard the Gaza Strip. At least 5 people were killed in an overnight strike in Rafah after Israeli forces attacked a residential complex in the area. An ongoing evacuation operation has uncovered more than a dozen bodies at a mass grave in Nasser Medical Complex in South Gaza. This has taken the total count of deaths to 344 since the process began. The White House has demanded for answers from Israeli authorities after the discovery of these graves. Meanwhile, the United Nations has warned that Gaza now faces imminent famine. U.S. Secretary of State Antony Blinken tells China to manage ties responsibly as he arrives in Beijing for his second visit this year. The bilateral talks begin with the threat of U.S. sanctions on China looming large over the support of Russia in the Ukraine war. Now, Delhi NCR continues to be the real estate hotspot. According to Anurag data, there were 29 land deals totaling to 314 acres in FY24, and most of them were for residential purpose. And interestingly, Zomato's Dipinder Goyal was the top deal maker in individual capacity and Godrej Properties in the developer category. Timsi Jaipuria joins us with the details.
Well, that's right. Delhi NCR continues to be the real estate hotspot. And as per the data shared by Anurag, which is a real estate research and analytics firm, they said that in the financial year 24, that is the financial year which has gone by, it witnessed 29 land deals in Delhi NCR involving approximately 314 acres of land, as against 23 land deals in FY23, which involved only 273.9 acres of land. Now, when we talk about the top deal makers last fiscal? Well, in the individual category, Zomato's founder and CEO Dipender Goyal spent 79 crores to buy a 5-acre land at Dera Mandi in Delhi, and Goyal signed this deal in the last quarter of financial year 24. In the developer category, the largest deal was signed by Godrej Properties, which spent 900 crore rupees to buy 7.91 acres of land at Golf Course Road in Gurugram. Both these land deals, that is of Dipender Goyal and by Godrej Properties, both were for the residential purposes. Also, when we see out of 29 deals that have been signed in the last fiscal, 25 deals were only for residential purpose. So residential continues to be the top deal pulling segment when it comes to Delhi NCR, and that's what this hints. In the developer category, again, the second largest deal was signed by DLF Homes, which spent 825 crore rupees to buy 29 acres of land at Golf Course Extension Road. Again, this deal was signed in the last quarter of the financial year 24. So let's see what happens in this fiscal, that is FY25, which are the top deal makers and how much worth of the deals are getting signed. Back to you.
Right, thank you, Timsy, for that. With that, it's a wrap on this edition of Business 360. News and updates continue right here on CNBC TV 18.